Our speaker today is Mr. Sabiiti, Spenser OS, the Executive Director of Stanbic Properties Limited. Spenser joined Stanbic Bank in 2010 as a building loans consultant, supporting personal and business banking. He has since then served in various leadership roles in project management office and operations department as head group estates services. Spenser has worked with National Housing Construction Company, Excel Construction, and the World Bank, supporting the USMID projects as Principal Quality Assurance Officer. He commands lots of experience in real estate service management, cost engineering, arbitration, contract, and project management, both in private and public sector. Spenser holds a Bachelor of Science degree in quantity surveying and a postgraduate diploma in project management. He's currently pursuing an MBA from Edinburgh University, Scotland. He's a Prince 2 certified practitioner and a professional member of the Institution of Surveyor of Uganda. Please join me to welcome Spenser on the call.
Thank you, Chair and James, for that great introduction. From what the speakers have been saying, I'm also happy to be part of this group, which I take to be my family. I'm going to ensure that I take you through this presentation, and you'll be free to ask probably at the end of the presentation. I've just put there the screen for those who can't attach the face to the name. You can be able to view me, so that when you meet me on Kampala streets, you don't bypass me. So I'm going to share the presentation. It is very simple and straightforward, and we take up our discussion from there. So the topic was about the impact of COVID on Uganda real estate, and as the introduced me, I work with Stanbic Properties, which is now also a company listed to deal with property management, facilities management, valuation, and also provide advisory services to our customers, especially in the CIB space, to do for them feasibility studies for those who would want to invest with the bank. Diving into my presentation, so we started with the operating environment, where we had a huge dependence on our micro. Out of this, we look at the country gross domestic product and the compounded annual growth rate. When you check between 2017 and 2019, we're at 6.5%, and real estate activities, we have between 2017 2019 at 10.9. This means that there is a lot of potential in real estate. There is some kind of deficit, and there is a lot of economic growth that can help. Then when you come to the industrial non-performing loans, by December 2019, we had about 4.7%. And when the one that relates to building and construction, NPL was about 4.5. But this now, because of COVID in the medium term, there is some level of recovery when business turns to normal. When we go to the property market, as you can clearly see, the average appreciation is expected between 4 to 5% in the medium term. The rental and commercial office, there is a depression. I think this is mainly because of the new about the turnover rentals, because in the medium term, you see in the commercial office, either companies are sharing space between office and home. Some people now prefer working from home, and therefore the trend may continue, and you find that either companies are no longer affording to pay big space within their environment. Then also on financing, of course, commercial properties, the lending appetite due to COVID-19 is not good as compared to what has been happening. So you'll see that the pickup may be in the next 2 years, depending on demand. Then we're also spending a lot of money on OHS in terms of health and safety configuration. As you're all aware, we never used to sanitize. Now we are sanitizing. Yeah, we are wearing masks. We are doing social distancing, in that now you can reduce the number of staff. For example, if the building configuration was at 10 square meters per staff, there is now need to increase the occupancy and have probably one staff occupying around 15 square meters. That will have an impact on the costs in terms of rental. On regulation, we all know that there have been some bills Parliament have been discussing. That is USDs, where they wanted most of the business to charge in local currencies as opposed to USDs. Then we had another law that was coming in on income tax and VAT, and of course the housing policy, which has helped also to increase on urbanization. Just in a nutshell, I think looking forward, the sector is likely to recover when we leverage on the micro fundamentals and, of course, good government policies. Then also, of course, the GDP is expected to rebound at 6%. And also the exchange rate you had, where central bank had to maintain the FX stability when we had IMF intervention. Those who have been reading and following up in the papers, you are able to see that. The inflation, we are happy that it may remain within the 3 to 7 if there is stability in the dollar. And if also government, if it continues to invest on infrastructure with budget commitment of above 15%. In my presentation, you'll see the government priorities in terms of real estate and where we should widen our eyes and see where the investment is moving. So on the now on exploring also on the impact and just focusing on the commercial property, we have the challenges that we're going to get is foreign investment slow down. As you know, most of our key developers we've been getting materials from China. And when you see our economy, most of the developers are Chinese, Indians, and some Eritreans and Ethiopians. Then they are expected to hold out due to the epidemic. Of course, there is also revenues and occupancy rates in the commercial space. Slow down on revenues for commercial properties due to no business activities for occupants, and thus escalating low occupancies for the key properties. Financing, I already said that there is a likelihood of an increase in NPL for the non-performing loans, and therefore may create a lot of legal disputes among the parties for the occupancies and rental areas. And also the local developers, you all know that we've been relying on importation of finishes. So we may have maybe poor quality in terms of the properties that will be coming on markets because of the transportation and the increased lockdowns in the different countries will also affect the quality that will be delivered by the local developers. Also now exploring the impact on focusing on residentials. You were all aware that most of the money that has been coming in from the diaspora inflows that will slow down. The sector is largely supported by the money coming in from the Middle East and UK. As you're aware, most of our relatives and our people in the diaspora, they have no time to come here and build and supervise. So they have been relying on buying houses. So you'll find the developers may not compete with the inflow of the money. And of course, also the demand may be low. The construction costs, and I think as choices, we need to improve on our research and innovation, because a lot of the local importers, especially in China, the supply chain, of course, is disrupted, pushing the cost of construction a little bit high. So this is where we need to focus on and kind of improve on our research capabilities and leverage on data to update our unit costings for construction. On rental incomes, as I said, majority of the tenants are driven by the informal income, disrupted by pushing down the rental prices to drive tenants retention. So on this, we've been affected in two ways. One is on the rental income that has been generated by the expatriate, that it is likely to draw down. And the tenants that we have, most of them will come complaining of, I've lost a job, I don't have any income. Let's now discuss about the costings in terms of rental. If I was paying 1 million, can I pay maybe 600 or 500? Some may even push to 60%. On the office space, because of the job loss is a key driver. What it does have big concern remain jobless on the economy downtown, because the space requirement is likely to drop if they reduce the number of workers, because the workers, they are also triggered by the kind of business that comes in. Then there is work of home productivity question, and I think it's what we need now to keep testing. We are now almost 8 months from March. We need to see whether we can see the kind of productivity, especially for the big concerns, for the key players in the market. Those are banks, big prestataries, on if people are able to meet their scorecard when they are working from home. Of course, high costs, I already talked about them in terms of the configuration and who should pick up these costs. Is it the landlord? Is it the tenant? So these are the questions that most of the tenants, landlords are asking themselves. And of course, because of the push from Minister of Health and the compliance requirements required, it may end up either going to the landlord or to the tenant. Then retention driven by the pricing per square meter is likely to drop because of probably low demand in the sector. On the industrial properties, the e-commerce uptick expected to have a long-term impact on industries, of course, disrupted by the supply chain of consumers and high demand for warehousing. This is like I put SPR, which is Stanbic properties, where I had an opportunity where we can increase this space, because either importations are coming in and there is either low demand, or they come in a space where there is low productivity and therefore may need storage. Then reduced manufacturing capacity because of low disposable income may see a drop in space requirements for the key job layouts and factory closures. you've had most of the companies either reducing the number of workers and cutting off some plants to just produce things that can just be consumed. Looking ahead, one is the additional costing on OHS spend likely to be passed on to the tenants as the occupancy picks up. So of course, the landlords may be paying right now because of the push they are getting from the government, but in the long run, this cost is likely to go back to the tenants because you need to protect yourself. Flexible offices, organizations are likely to create provision of flexible offices between home and work as opposed to increasing occupancy. You'll find someone had about 500 square meters, and now he's talking about maybe I can operate within 100 and create probably like hot desks. It may increase, and also pressure on rental concessions to drop in the economic activities across almost all rentals, be in rental space, commercial, residential. This pressure, we may not control it. Foreclosures is likely to impact the prices, oversupply. Then sector recovery with the economic activities. Opportunity sectors, I think you've seen the budget from the Minister of Finance. Where I saw that agriculture was allocated 1.3 trillion. Then tourism, about 194. Construction and housing is about 200 billion, and oil and gas sector is about 2.6 trillion. So you can see a lot of opportunities in oil and gas sector. But now the question is, how are we prepared to be vendors or as quantity surveyors for the sector to look at us as big players? When you look at oil and gas sector, you're talking about occupier services, you're talking about compensations, you're talking about valuation. These guys will come with high demand on accommodation. They would come with high demand in office space, warehousing. They will need access roads and some kind of re-engineering in their camps. So the question comes back to us as quantity surveyors on how are we going to tap into this budget to ensure that we're also relevant in their sector. Of course, with tourism, now there is kind of a drop, but how do we also become relevant? You see how camps are set up, how the tents are set up for the housing and the hospitality sector, the competition that is on the accommodation for the tourism. I'm not sure that based on our research, we are able to compete and come up with innovative cost saving initiatives for the sector to be able to survive. Agriculture was also looking at probably warehousing, and also probably on the increase was also on demand of a good working environment due to COVID. As you're aware, most of the staff in the agriculture sector, they are on their farms and they receive a number of workers from the neighborhood and the community. So it is now, how are they protected? So this is what will create the demand for the offices, because whoever is there, whether it's a farm manager, may need to be protected, and they will need access roads. How do we become relevant so that we can provide them the right costings for them also to be able to survive. So members, thank you very much for listening in, and wait for the questions.
Thank you, Spencer, for that presentation. Members, right now, the session is open for questions. Okay, Brian Wamani is asking, what is the proportion of OHS on rental income?
So I think this is what I talked about. OHS right now with the landlords, it's still handled under service fee. But I think in the long run, as you saw in my presentation, I also mentioned about it, is that the cost of OHS may be now be transferred to the tenant in this case. So normally, depending on the building, if there's a commercial office space, service fee has been ranging from 2.5 to 5.7, and when it comes to malls, you'll find service fee between 5 to 7. So probably they may have to increase like $1 to cater for OHSC requirements. Yeah, another question I'm seeing from the chat room is to share the presentation. Yes, I'll share the presentation with James, and he should be able to saturate it. Then another question from the chat room is that major banks supporting activities like financing in oil and gas projects, how are those risks calculated? And with this COVID uncertainty, are there any lessons learned? And what advice can you give to investors venturing in this sector? So I think, as you all know, that the oil and gas sector is specialized. I think with time, most of the, and everyone, even on the call, you're not going to stop moving because of COVID. Transport is very key. When you talk of how are the banks risking the finances, because now oil and gas sector itself, it is a very big sector. We have the contractors supporting the oil and gas sector. We have the SMEs. We have the main contractors during the exploration. When you look at right now, Total and Sinop. So most of the activities are either backed by government, and they of course secure bonds. I think to answer the question, before the banks give you the money, you have to have kind of performance board or insurance board to cater for any risk that may arise. Then there's also a question about the extent to which the subcontractors are affected, and advice on how best they can keep in business and remain relevant. For example, access credit at a cheaper rate to keep them moving. Of course, as I also said, with subcontractors, we may need, of course, some kind of government intervention. You've seen government intervening on the teachers. You've seen government also intervening on the tourism sector. When you look at the money they have put in, I think is Uganda Development Bank to cater for some sectors that have really been affected by COVID and who have not been able to get access to credit. And also, of course, from the BOU perspective, they have also reduced kind of interest holidays. You have a loan, you come and negotiate and say, my company has not been operating for this number of months. And what the banks are now doing was to kind of agree on the payment schedule on when the interest will resume when you kind of recover. Another question also from a chat room is what is the effect of work from home on the uptake on commercial properties, especially in Kampala? How easy it is to change used for properties. So now this is two-way in terms of the quantity surveyors and engineers and architects that are listening in, is that now we just need to change our ways of work and ensure that when we are doing our planning and all these designs, I think there is something now we cannot eliminate in our designs. Previously, we've been having designs where someone will say, I need like a Bible room, or I need a family room, probably on the first floor. But having an office at home now is not a luxury. So these are the new features that may be appearing in the new modern houses going forward. And if you followed my presentation, working from home, of course, if companies are convinced that there is some level of productivity, then of course they will start reducing on the demand for the office space. Thus having some staff work from home and others in office, probably where you may need to create some hot desks. Also in the chat room, is what measures have been adopted for outstanding mortgages where clients have lost their source of income? Oh, wow, this is a good question. But I think, as I already said, it is just about the relationship between yourself and the bank, and going back to renegotiate and try to convince your relationship manager within the bank on when you're likely to recover, and probably kind of reschedule your monthly repayment. And maybe some of them come and negotiate, they want now to pay for a longer period. He took a loan probably for 10 years and has been paying about 5 million per month, and he comes and negotiates that now he needs 20 years and he wants to be paying about 2 million per month, because that is within his affordability. So it's all about the relationship that you have with the bank, and of course your commitment to paying your loan. I think this was a personal question, because I'm saying that according to your analysis, has COVID greatly affected real estate investments in upcountry districts like Jinja? Of course, when people lose jobs in Kampala, we also lose jobs upcountry. But of course, the rental parameters for upcountry is not the same as the ones in Kampala. However, for these companies that have ambitions of expanding into these towns, you've seen a number of organizations, even including banks, trying to downsize because of the new norms. When you look at, for example, Stanbic, we do now a lot of branch for future. When you go to most of our branches, you find that now you don't need to go to the till to deposit the money. Within the ATM, they are put bulk note acceptors where you just deposit money and it gives you a receipt. What does this mean? It means that in the long run, what you see as banking halls will now be shrinking down as people get used to probably internet banking, and as they learn how to use this new technology. With your guidance, I think you are saying, what advice can you give to individuals in the diaspora who still want to invest in real estate? I think the challenges they were facing previously was maybe poor quality works from the contractors they would employ locally, and they were mainly depending on developers who were doing sort of condominium apartments or gated communities. But now, because they also have limitations on travel, you can imagine if you want to just go to Nairobi, you may need about 3 days to first go for your test. And wait for when the flight may be available, and should anything happen to that flight, you may need to first go for the same test, and also when you reach the other side, when you want to come back, it's the same. So it's kind of inconveniencing. But yes, with the now changes in technologies, if you know, like about 10 years ago, there was no WhatsApp, there was no way you could show someone what you're actually doing on the site if it's like in UK. But now with the increased technologies and also the restriction for our local authorities, I can tell you KCCA is now very, very strict on the qualities. You know, we've also instituted the Housing and Building Regulation Board that regulates the quality output to reduce on the buildings that are collapsing in the city. So I think with these interventions, may create some kind of leverage for the our people in the diaspora to keep on investing, especially in addressing their housing need. But when it comes to commercials, I think with what is happening, they may fear to invest, because everyone now, whoever has money, you see a slight increase in the treasury bills in the Bank of Uganda, and people feeling comfortable having their money on their fixed deposits.
Raymond Twali has his hand raised up. You can unmute, introduce yourself, and then you raise your question.
Now, Mr. Spencer, you talked about the bank loans and how they tried to make them simple in terms of payment. But a colleague of mine had a challenge when he went to the bank for during COVID. You know, the process was a bit hard, so he went to the bank to try to negotiate whether they can extend his loan. But the surprise that came up with that was, much as they extended the loan, they still calculated this month that was going to forfeit, and got the interest of those months. They topped it up on the other current loan. So I don't know what you'd have to say about that, whether it was really favoring the people like us who didn't have money at that time or trying to struggle with paying back loans, or whether the bank really just wanted to make money. It wasn't trying to work with the people in terms of trying to help them during the COVID period. Because if the loan percentage was still the same, I don't think they really did help us. So what do you have to say about it? You extend somebody's loan, instead of at least giving him a lower percentage during that period, you still charge the same percent as the previous.
I think, thank you for that question. And as you know, during COVID, the president was very clear on landlords, on mortgages, on bank loans, and all that. It really depends on someone who's bargaining power, on how you bargain with your bank. Because the bank can also just, I don't think a bank can just lose money because that money they gave you as a mortgage probably could have been invested somewhere. What I think they were very, very flexible on was on not putting customers on pressure in terms of, if we borrowed 100 million, and for example, you know, when you talk of a mortgage, and I think I am the right person to answer you, because I've worked in mortgages, and I know how they are structured and how a customer can benefit. If you have a mortgage and you're not doing accelerated payments to reduce on your principal, and you borrow for 10 years and you'd want to pay that money for 10 years, and of course you find you paid a lot of interest. So to a customer, I think the best way to handle mortgages is any penny that you get, try and reduce on the principal. You try and reduce on the principal, and that's reducing on the interest. But when you leave the two to run concurrently, you find yourself, when you calculate, either you paid a lot, but the initial assessment, and this is what usually I tell people, there is no condition that is permanent. Today, you are an officer earning 1 million or 2 million, the bank will appraise you to get that money basing on your income. So if you take a loan, let's say a mortgage for 20 years or 15 years, and really after 3-4 years, you get promotion at your workplace, what customers do, some of them kind of ignore, like, now I've gotten more money, so I have a lot of money on me, and therefore let me continue paying the 1 million I was appraised. But if they increase your salary and you say, I'm also going to increase my monthly repayment from 1 million to 1.5, the years of monthly installment will move from 15 years to about 12 million. And that will cut all that interest that you are going to pay from 12 years to 15 years. So it is how you as an individual, how you're disciplined, because it is discipline that will make you survive in a mortgage environment. Otherwise, for the bank during COVID, what they could just do to customers, they would say, now you don't have money, can we give you a holiday for 3 months? You don't pay anything, or you would want to pay only interest and we don't charge you principal. For example, if you're paying 2 million per month and probably the interest is about 300, and they say, okay, you keep on paying interest and we'll refer this principal later. Otherwise, they can't say that we are just going to ignore the principal. They are also not making business.
Yeah, thanks. Hello, thank you, Spencer. Asaf Opio, you have your hand raised up. Please unmute, introduce yourself, and yes, raise your question. Thank you.
Yes, my name is Asaf Opio. I wanted to just add on to my colleague's previous question. Maybe Spencer could differentiate between a loan holiday and a loan schedule, because I think the community out there, especially those that are clients to loans, whether salary or mortgage, the bank has really taken advantage of this. You find they're giving you a loan schedule, but they are still calculating interest. You know, they're giving you a loan holiday, but they are still maybe clearly stipulate for us what is the difference between a loan schedule and a loan holiday. And in this case of COVID, since you work in the bank and you've been in mortgages, you find that of course business was not moving on well. What was the underlining or benchmarking principle in handling? Were people excused? Were people rescheduled? Were people given holidays? Thank you.
Okay, Opio. I think the question is straightforward. A loan holiday is just where you're excused not to pay anything, but that does not mean that you're not going to pay. It is just a negotiation between the two parties to say, today my pockets are not okay, kindly give me 6 months and I start paying you. That is a loan holiday. But when the moment you change on your schedule of payment of a loan, or you defer, does not mean that the interest has stopped. When you say a loan schedule, when you're applying for a loan, they will give you a schedule of you're going to pay X amount of money every month for a period of, for example, 10 years. When you alter that schedule, sometimes it even come for some other banks, not the one I work for. It comes with some penalties because you've altered what you had agreed. It's like when you make an agreement, you're going to pay someone X amount of money and you issue a check. Probably by that time you don't have the money, and you have to go back and renegotiate with, let's say, that money lender, that I gave you my check, but I don't have money to pay today. So can you kindly maybe give me 1 more week? What will happen to that check? This money lender will also include his interest for those days you've deviated from when you're supposed to pay. So when he gives you that holiday, I'm just using a money lender just to put it in our local context. The holiday becomes that time when you've negotiated with the money lender to give you more 10 days. That is a loan holiday, in that you're not paying anything. But since you've rescheduled to 10 days upfront, this man will get that check and will request you to issue him another check that includes that interest. So loan rescheduling is you have a schedule. If you reschedule, you can reschedule based on very many other reasons. Number one, you can reschedule a loan because you want a loan holiday, or you can reschedule a loan in terms of the monthly installment if you bring in capital to reduce on your principal. So those are the usually two parameters. Or if like a person who owns the who had applied for a loan probably dies or something happens to him, now that's when now you come back, and the person next in kin, now they look into other parameters. What is insurance talking about? What had they agreed? What the beneficiaries, what are they supposed to do? It's all stated in those big documents that people just sign. Some of them don't read, but all that you're asking is usually stipulated very well in the loan documents. So there is a good question here. What is the implication of COVID-19 on the construction costs? I think if you followed my presentation, I said as professional quantity surveyors and as cost engineers or building economists, we need to kind of get our hands dirty and engage in research, because the cost of construction on the unit rates may rise because of we've been depending on importations. You all know what is happening. Some countries are going into the second lockdown. So that means that the transportation costs will likely increase, and we're also not sure on the dollar. So as the dollar increases, the unit cost of importation will also rise. Then another question was, what are the current vacancy rates of office and retail space look like most hit by COVID-19? Yeah, of course, some businesses, you are aware that some businesses, even including some banks, have closed due to the inflows and the expenditures. Of course, if they don't tally like any other businessman, yeah, you need to validate and re-engineer your company to make sure that the projected income will support your expenses. So of course, since there is no demand for more office space, what most landlords are doing, if a tenant wants to move out, they will kind of go into an agreement of let's say let's reduce for for a specific period of time. I am sure like some malls where we have branches have given us maybe 25% from April this year up to the end of the year. Some businesses, those that closed permanently, you'll find like in a rental space, they are given about between March and June, you're expected to pay nothing. And maybe from June to about October or end of the year, you get about 50% discount. And from Jan next year to about June, because there is the recovery period, and you find they have given a discount of probably 25%, and going onwards, the things become, the rates return to normal. So it's all about how well they have been negotiating with their landlords. But at least with most of the tenants and even us where we have our bank premises and where we are renting, there have been an arrangement where landlords have been so good and understanding the situation and kind of giving us some waivers on the rentals. The last question, I think, why hidden costs for loans? I think this question may target other financial institutions, but I can firmly communicate, like as a bank, all costs are always flagged off at the time when you are acquiring the loan, and there is no any hidden cost that is applied. Everything we do is done in a transparent manner, and I don't think there is any practice by my colleagues in the bank of where they hide other costs.
Thank you, Spencer. I think at this moment you can give us your closing remarks, and then we shall officially close the session. Except if Sarah, you have any communication you want to share
No,
with
Chair.
the membership?
No, Chair. Thank you.
Thank you, James. I think as professional cost engineers and building economists, I think the take from what is happening and also in our working environment is that, of course, COVID, we are going to live with it, and the earlier we start to mitigate and find new ways of work, the better we become prepared. But it's all tagged on two things. One, planning. We need to plan very well. We need to plan whatever we are doing, because we are the ones guiding the economy when it comes to cost effectiveness. So our planning is a big element, because in our kind of environment, it starts from the inception of the project up to the end of the project. Along this side, some of the projects you find were employed as either contracts managers or project managers. Now the re-engineering to think about the procurement process is very key, and also increasing on our research to provide good cost inputs in terms of developing the rate per of executing each activities from first principles. It's, I think, a discussion that we need to be on the top of the game. Otherwise, we'll start pricing projects, and you find that there are a lot of cost overruns. And I think as our profession, we must be very cognizant of our principles, and also ensure that the variance between the projected cost estimates and the actuals do not vary to a big margin in excess of 10%. So I think my take is planning, and I repeat it, planning, and plan better. Otherwise, thank you very much, members, and let's keep praying, one for our institution and also for our families through these hard times. And of course, we should all keep safe and follow the SOPs. Thank you very much.
Yeah, thank you, Spencer, for that wonderful presentation. I believe the members, all of us, have gained. We never stop learning. There's quite a lot of information out there, and I believe many have done this presentation throughout the the pandemic. We've had more so similar presentation, but we are always learning something. Your audience was cutting across. We have our brothers and sisters from other chapters. I know you've been referring mainly to quantity surveyors, but the audience was cutting across, and I believe also others from the build environment outside the surveying fraternity. Thank you very much again from me, the president, the secretariat, and council at large. Thank you for sparing this time, and also thank you to the members for sparing time to log in. Thank you, and have a good evening.